Let's bring in Ryan Lamont. He's the advisor to the board of directors at Securrency Capital. Ryan, good to have you with me this morning. I mean, he really crushed. I mean, the bond market is where you go for your dreams to get crushed brutally. 2-year yields, they're closed in cash this morning. They're trading another 7 basis points higher on the futures, which we showed at the start of the show. In your mind, very premature to talk about pausing. How brutal a reality check was this last night?
Thank you, Manus. Yesterday, last night, there were 2 bombshells, really. The first one is we're not pausing. He was very clear about it. Our opinion 2 weeks ago was they're going to pause at 475. The second bombshell is that, and I think not too many have picked it up, Chair Powell is more concerned about under-tightening than over-tightening. So he's being very aggressive. Core inflation is still going up. He's afraid about entrenchment and stickiness of inflation, and it is becoming like that because the wage price spiral is showing its ugly face. ADP has showed a wage increase of 7.7% annualized last quarter.
You're more worried about wages.
Oh, yes.
You're more worried. You seem to be more worried about raises, perhaps wage raises, rather than maybe the commodity alpha, the supply chain alpha. So this is the second round. This is the real second round inflationary burst to come.
Absolutely. As an economist, wage price inflation is the worst thing you can have. For me, inflation is cancer. I'd rather have recession because a recession is a flu. Recession is asymmetric. It doesn't hit all of the economy. Inflation does.
How hard I mean, the debate is this: is how hard a recession do you think he's prepared to take to slow inflation?
I think whatever it takes, as long as we don't get into systemic failures, and I don't think we will get there because the US economy is really quite strong at the moment. All of the numbers show it. We're seeing earnings revisions. It's quite clear over the past 22 weeks. We've seen negative earning or downgrade earning revisions by the Citibank index. However, I don't see a massive recession, no.
The earnings revision, I mean, the very immediate reaction by the growth stocks last night in the NASDAQ, Apple, Tesla, you know, the monster moves by some of the monster stocks. But do you think it's going to get just more difficult to justify buying the dip? And are you more worried about a 10 to 15% drop than you are about a 10 to 15% rally, as everybody seemed to be writing about furiously when I was at ADIPEC?
The juice is no more worth the squeeze. Since April, we've been saying stop.
The juice isn't worth the squeeze.
Yes.
Say that again. The juice isn't worth it. Come on. The juice isn't worth the squeeze. What does that mean? That
means the risk we're taking to buy equities doesn't justify the return we're getting. All of this volatility we're seeing on stocks is eating up our risk budget. So it doesn't make sense to buy equities anymore. And since April, we said no more buying the dip. Where the valuations are today on US stocks at the current inflation and at 5% rates is absolutely not justified.
So if you're not buying the dip, you haven't been buying equity since April, the juice isn't worth it for the crush. So where do you take risk?
40% cash back in April, and I said it on the show, then increased it to 50% cash, switched to Swiss franc when the US dollar CHF hit 1. Private equity, bargain hunting on VC, and you have an amazing region called the GCC, high quality credit, stocks. You've seen the performance of GCC stocks. Bayanet on ADX yesterday went 3 times its IPO price. You have some amazing opportunities in the GCC to buy into, and then some very complex convexity strategies using CDX and iTrax.
And I don't want to drown in the vortex of convexity, but you think it's worth buying convexity, buying protection at the moment? It's just going to ratchet from here?
Absolutely. Convexity is back. We've lost convexity over the past 10 years, Manus. Convexity pre-2008 was a thing. We investment managers used to get paid very much to create convex strategies. This is gone since we've had a Fed that is just throwing money for free. Now we're doing what we're good at, creating convexity, active management. This is what we need to do.
Yeah, just be careful on the leverage there, Ryan. Just be careful on the leverage. Had a conversation yesterday. You boys and girls love writing up convexity, yeah? But it's doubling up on the leverage. So, moments of great ecstasy, 8% rally on the Hang Seng, 2 days, Bosch gave it back. Zero COVID. They're not going to remain locked forever. So how do you prepare strategically in a portfolio? Do you just live without China until you get a de facto narrative they are reopening?
Well, that's the third bombshell yesterday or today, which is China will not reopen. We were preparing for the reopen and setting the stage to start including China again, but we won't. It's very hard to say when they will reopen. It's a big unknown. Now, another concern we have is, again, related to China, is Taiwan. So Taiwan produces 65% of the world's semiconductors. Taiwan to the US is like energy to Europe. If Taiwan, something happens there, the US will be crippled on the semiconductor side. Taiwan Semiconductors Manufacturing Company is responsible for 65% of the world's semiconductors. That's another concern, and that's why we're staying away for now.
Geopolitics seems to be the tail risk that everybody is talking about, whether it's on China, US relations, US-Saudi relations, and US, obviously, Taiwan is critically important. Can you trade, or how do you trade, or do you talk about trading tail risk of geopolitics? What is the hedge? I know you said convexity a little bit earlier on, but for you, what is the hedge trade there?
When it comes to geopolitics, we take the sidelines.
Okay.
Geopolitics are very hard to forecast.
Now, gold is something I was tapping away. I was looking at gold. Yeah. Obviously, we have a reaction function to the Fed everywhere, but gold, in your mind, is driven by central banks trade rather than the retail.
Gold has its own cyclicality. For example, in India, during the wedding seasons, lots of demand. However, the real demand comes from central banks. And we've seen in Q2, several central banks around the world have bought the massive amount of 400 tons. This is the highest amount purchased in a quarter since 1967. If you speak to any central banker, he'll tell you buying gold is an insurance policy. Central banks, certain central banks, are increasing their insurance at the moment.
And who in your mind is increasing their insurance the most?
Central Bank of China, PBOC, you have the Central Bank of India, and a few others. So this tells you something.
Ryan, thank you so much. That's my guest this morning, Ryan Lamond, advisor to the board of directors for Currency Capital.